What is going on, guys? Welcome back. This is part two of today's video. Part two. So, if you are interested in seeing the way I find some of these stocks, check out part one. It's going to be uploaded first. It should be already uploaded if you're watching this one. That is the screeners that I go through, the process that I go through. It's very quick. It's like 30 minutes to an hour typically. Um, of finding the stocks. So first step for me is stock selection. And I have a thorough process in which I go through about 3 or 4 different screeners in order to find, 3 or 4, maybe sometimes 2, maybe sometimes even 1 stock that I'm interested in trading for the next trading session or in a couple of days. Okay, so go through, check out that video. It also has a breakdown of today's market overall and some other key lessons within that video. All right, so this one is, in the other one, we went through the stock selection, figured out which 3 stocks we are interested in taking a deeper look at. It's actually 4, I think. It's 4. Taking a deeper look at, and now we will go through the analysis of them, and I'll show you guys what that looks like. So let's close out all of this other stuff, the other screeners, FinViz, we can get rid of. Stock screener here, we can get rid of that screener. You guys can see that in the other ones. And now we'll open up some of the things that are super important to me for analysis. And we'll just go through that very quickly. So MITK, this will be a little quick. So if you guys have any questions, throw them down in the comment section or hit me in the DMs, the YouTube DMs is what I mean. I don't know if that's a thing, but I think it is. Hit me on the YouTube DM. So one of the stocks that we were looking at was MITK. Now this analysis is going to be quick. Again, if you have any questions, just shoot me a message. I just want to get through this so you guys can see what we're looking at. So the daily chart looks like it just broke out of a key level right here at 1488, and now it's at 1621 and trending higher. And on the daily, it looks like it's been in a consistent uptrend ever since COVID. So clearly there was some sort of dip, some level of dip right here, and then it just broke out of that, hit a low right there, and then it's been in a consistent uptrend ever since. Ran into a bit of a wall right here at $14, and then just recently broke out of that wall. And then there was a second wall right here, probably $15 or somewhere around there. And then it just gapped above that and continued higher. So this thing looks like it wants to rip. It already did rip. And let's analyze it to see if it might have some room for continuation, for momentum. So 1621, the things I like to look at, okay, clearly it's broken out of its 52-week high. It's in the technology sector, strong sector, so that's great. That's actually the strongest sector right now, which is awesome. On a weekly chart, let's see what it looks like. The resistance level is 1481. So it just broke out of that. That's similar to what we saw on the daily chart right there at that 1488 level, 1481. Close enough, very close. So that's the pivotal level for a lot of traders. And on a monthly time frame, it was closer to about $12.93. So whoever bought in at the break of $12.93, anticipating, a clean rip on the monthly chart, they are very happy. That was a great trade. Great decision there. So clearly the level that we'd be watching, it would have to make sense. 1485 is the breakout point, right? And it's at 1621 right now. So that would mean, this would be extremely difficult to, not extremely difficult, it would just be difficult to create a, stop, entry, and target on it. There's no target because, it's at all-time highs. So there's no target on it. And the stop is the stop all the way down here at support at 1485. Do we do that for support, or do we do this candle's high? So we say, if the stock rips tomorrow, opens around 621 and just continues higher, we buy 15 cents higher. But then what's our stop? Is it the close of this candle today? So we have like a tight 15, 20 cent stop. Like that's pretty difficult. So this is the challenge here with this stock. Is figuring out what's the level. In order to figure that out, we might have to dive into the intraday, and look at day by day, what has this stock been doing? What areas did it run into trouble with? That would tell us a better picture on where should we get in and trade this particular stock. So on the side, while we're looking at things, I am going to open up Think or Swim so we can analyze that together in a bit. But before we do that, I'm going to go through some other things here. Float 41 million, that's good. I like that. The average volume is about 600,000, but today I did 2 times that amount, almost 2.5. Insider transactions looks like it's been going negative, but there's still some insider ownership. Institutional ownership looks like it's also been going negative, but there's still some institutional ownership. Earnings per share 41, sales is about 22. So those things look okay. Those things don't look too bad. This isn't top on my list though, okay? And I just know it. I've looked at these a number of times, so I can look at this now and tell that it's not going to be the top one. All right, so then I go over to bar chart, free analysis website, and I'll type that stock in, and I'll see what they think the stock is going to do, just to see if I can get some validation on my opinion. 88% buy with the strongest short-term outlook. Okay, so they think this thing is going to continue to rip. 88%. And then I go to their trading strategies, which shows, if they trade it based on their own signals, what would their profit be? And clearly, they don't have a good feel for this stock because they would have been in a negative by $1,000. On the buy, that's all of their trades, including shorts. But on the buy side, they'd be down $47. So clearly, the majority of that $1,000 deficit is on the short side. They're not really good at shorting this stock, but they're also not great at buying the stock either. So I wouldn't trust their opinion on this stock about how it's going to perform. But there's been plenty of times where that number looks really good on bar chart and they've traded it well, and that gives me more confirmation that, okay, they know what they're talking about for this particular one. On tip ranks, moderate buy from an analyst, bullish right here, but the hedge funds are decreasing their positions, the insiders are decreasing their positions, and we saw that on FinViz, and that's very important to me. I like to separate this into 2 categories. I usually split this line right down the middle right here, right? And this area right here is the area where, people are saying whatever they want about the stock. They're telling me whatever they want. Buy, oh yeah, it's bullish. Oh, very bullish. News sentiment is bullish. The opinions are bullish. The analysts say it's bullish. This doesn't matter to me, right? Because that's everyone's opinion of what's happening. That's everyone's opinion of how they interpret the news of this stock. That stuff doesn't matter to me. What I really care about is the big money, the big money. And the big money is going to be these guys over here, the hedge funds. What are they doing? What's the smart money doing? They're decreasing their position. What are the insiders who work for the company, the management team who's supposed to have the most belief out of everyone in the entire company? What are they doing? They're selling their positions. So I look at that and I go, okay, that tells me the story, right? That tells me the truth behind all of this bluff, all of this stuff here. This tells me the truth. That's everything I need to know right there. And then the fundamentals are not great, so awesome. The technicals is just the chart perspective, and the chart looks good. We know that. It's at a breakout point. It just broke above it. But this right here doesn't give me full confidence that this stock has a lot to continue pushing it higher. So we'll see. I can be wrong, but my job is to protect my money first and foremost. The second job is to make money. And in that order, number 1 is to protect my money. Number 2 is to make money. So I am protecting my money first and foremost. So MITK, let's look at it on this website. I like to look at Wall Street Zen because they give me a good industry perspective of how it's performing compared to its peers in the same industry. And the valuation is above 50%, above the industry average. The industry average is that yellow dot. Financials are way above, apparently. Forecast is way above, and the performance is above. This is tricky. So this website basically provides a very good outlook on this stock, but the other 2 did not. And they're saying that the revenue has grown faster per year than U.S. software than the average by 24%. The other one is 24%. Revenue slowing down, return on equity slowing down. That makes it difficult. Generate a higher return on assets. So this is strictly performance, stock performance valuation, trading below its intrinsic value of $32. They called it a Benjamin Graham of Intelligence. Okay, I don't know. I read the book. I know who Benjamin Graham is. I know he was very Warren Buffett recommends this book, but I don't really understand. I don't know what this formula is, that why they're rating it to that. Good earnings based on its relative share price, US. I'm skeptical on this one, so that was an interesting. That one says yes. MITK, we'll look at one more chart mail. I like to see their opinion as well. Technical analysis, they are giving this a strong technical rating of 10, and that's just basically on the fact that it's broken out. It's doing extremely well. The stock's been in an uptrend for the past, since COVID. So how can you give that anything less than a 10? It's just been a consistent gainer for anyone who purchased it. But the setup right now, horrible. And we talked about that. It's above all-time highs. There's not really a clear place to get in. There's not really a clear place to get out. That's the setup. Like, where do I get in? Where do I take a loss if I have to? Where do I take my target for profit? If you don't have those three things, you don't have a trade. And that's the setup. So even though the stock looks great and it's breaking out to new highs, if you're not already in it and involved in that great technical breakout, then there's not a great place for you to get in and get involved in that. And that's what that is. So it's a 1, so that's horrible. That's obviously as bad as it gets. And in the fundamental rating, they're giving it a 6, which actually isn't bad. Profitability, valuation is horrible, but they think it can grow and have strong growth based on these numbers here. So, some of these, they are reporting pretty good. Let me look at FinViz one more time and see if we got that. They're reporting pretty good numbers on some of the other stocks in regards to fundamentals. And actually, when we look here, it hasn't been bad. This is positive. This is positive. Return on assets positive. For the past 5 years, it's been positive. And this year, it's doubled its amount, it looks like. So, yeah, actually, the stock has been doing pretty well from a fundamental perspective. Yeah, this is a great breakout. We just can't find the setup. That's the problem. I don't know where to trade this. So, we can actually keep this one on watch to see if it comes back down to that breakout level of 1488, and see if we can catch a bounce if we see some strength on that. That's the main thing I would suggest, because everything looks good actually, except for the setup. And the setup is extremely important. Okay, moving on. MITK, so we'll just have that on watch. We're not going to take a trade on that. All right, and then the other two, ATEN, we'll do the same thing here. You guys see the clear level right here at that $8.30 something cents, 31 cents right here. If I draw a line across, and you can see how in the past that was a pivotal level right here, right here, right here, right here, right here, so clearly that's the level, and it's right at that level. Now we go over to the weekly. That's the level. 839. So I just touched it once all the way back here. So clearly that was an important spot. But the breakout spot is 867. That's the breakout spot for this stock. And then it will be at all-time highs. Maybe let's check the monthly and see. Nope, it will not. So if it breaks 860 or 850 right here, then it's got some room. It's got some room to run to about 947 before it runs into trouble. So actually that's a good amount of room for profit. It's in a strong sector. It's got potential to run to about 960 before it runs into trouble, 950, somewhere in that area. And then if it breaks through that area, it's got room to run to 1069. This one actually looks good. Let's see the fundamentals here. 66, 63, that's a little higher on the share side for float. Close to 1 million average volume. 26 cents ATR, that one's pretty low. I don't really like that number. Basically that's telling you how many cents per day this stock, or how many dollars or cents this stock moves on average per day. And they're saying this stock makes an average move of about 26 cents per day. And if you think about that, there's not a lot of room for profit. Like if a stock runs, typically $1.50 per day, then you just have to find the right spot, the breakout spot, and then that thing can run for an additional $1 or something like that, and then you spare 50 cents somewhere, or if your target is more like 50 cents, then you have room within that average range to get profit. But if the stock only runs 26 cents, then you're not going to make a lot of money unless it doubles that amount, and that's a little bit of a challenge there. If it breakouts usually can sometimes ignore. They still They sometimes ignore this number, but we still want to be safe. All right, as for the numbers, these things look good. These things look good. They've been positive for the past 5 years. Interesting. Um, and and sales looks okay. I wish that number was higher. I go over to the news, see if there's anything alarming in the news. Let's see, this year, business board of directors authorizes 50 million share buyback. Huh. That's one that might stand out to me that I'm not sure about. But I don't see anything else that's alarming. In fact, it doesn't look bad. It looks like it's beat revenue um, estimates and earnings a couple times. All right, let's go through the same process. So we go, this will be quick. ATEN on bar chart. And ATEN is giving us a rating of 88%, similar to the other one. We need bar chart to switch it up a little bit. Let's go to their strategies and see if they would have traded this, how profitable they would have been. They would have lost money, so they would not have been a good reference for this stock. On the buy side, they would have lost the majority of their money, and on the short side, they make more money, but they still lose money. So it's like going to your friend and saying, hey, what do you think of this stock? And this friend says, yeah, man, buy it, 88%. I think that thing will run. And then you look at their history of how they've done with the stock, and they've done a horrible job with trading it. And then you know the truth. Like they have no idea what they're doing with that particular stock. And so you don't trust their opinion on it, right? Because they don't have a feel for it. So that's what I do with that website. I try to see which stocks they have a feel for. If they don't have a feel for it, I won't trust their opinion. Then I come to this one to just see what the ratings are. But primarily, I look at this one just to see this area, as I showed you guys before. Either this area right here, which is what they think is going to happen, the analysts, and then here to see what's actually been happening, which is a decrease selling from the insiders, strong technicals, obviously, and then decent fundamentals, and then a 7 overall. So I like the 9s and 10s. That's usually my range that I go for to have a good feeling about the stock. So this one, I'm getting an average feel for it. I didn't like the bar chart review. I'm not a big fan of this one either. This MITK surprised us on Wall Street's end, so let's see if it surprises us again here. ATEN, it doesn't look like it's going to surprise us. So it's slightly above the industry average on valuation, above on financials slightly, above on forecast slightly, and below on performance. So that's not great. So now I won't even go to chart mail because I got 1, 2, 3 references here in which I don't feel great about the stock. So for that reason, I'm actually just going to cancel it out, right? I'm not even going to take the risk on it. Because if others are saying, they don't believe that this thing has much value, why would anybody buy it? And how do you make money? You make money when other people buy the stock as well. Like your 1,000 shares or your 2,000 shares or your 3,000 shares, whatever, however many shares you're buying by yourself is not going to move any of these stocks at all. You need to know, where is the big money going? Where are the hedge funds going? Where is the smart money going? Where are the big investors going? Where are they putting their money because they see value in a company and they think it's going to run even more? That's where you get behind and you latch on to that stock, you get your couple of shares in and let them push the momentum of that price higher. Okay, that's what you look for. So if you go through this and the analysts don't like it, not that all of your opinion is weighed on the analysts, but obviously you're using different points of opinion to get a full perspective on the stock. And if the analysts don't think it looks great, if the insiders aren't investing in the stock, if the hedge funds aren't participating in the stock, then there's no reason why you should be either, because your money is not going to move the stock. Now, with that in mind, Rite Aid is a stock that everyone's aware of, including the big money, the big money. And so we should see something significant here, right? We should get a clear story. So when we go to this daily chart, we see that looks like the level was 1851. Okay, you see it right here, all the way back here, right here, tap that level again, and then finally just broke above it. And it's using it as support now. It is not breaking below this level. Tried and got pulled back up by the bulls. So someone's trying to hold it up, and that could lead to a breakout. So this is an easy trade. If it gets back above 1874, you take the trade and you ride it from 1874 to about 1950 is going to be its next resistance area, and then see if it retests 20. So that's an easy trade right there. This one I actually like. Let's see if we can see a similar story on the weekly. On the weekly, the resistance area is 1987. It's pretty close to that $20 mark right there. Basically, it's $20 essentially. So yeah, it's 1999 actually right here. So yeah, there's room there to go from 1834 to go to $20. So I like this as a, it's not a breakout yet, but it's approaching that breakout level. And do we think it's going to retake that it can retest that level? Yeah, I think so. I think so. Look what it used as support today. 1770. Where is 1770 significant? Right here, right here, right? Um, Not so much here. Actually, it kind of used that as a for the short side, right? Like it hit this level at the top for the bulls and then got pulled back down. So 1770 is an important level. That might be some people's stop loss. That's a pretty large one if it's already at 1834, and I would anticipate getting in a little bit higher, right? 10 cents because I want to see it move up. Um, so that would be a tough stop loss. So we'll see. But the weekly, there's some clear, easy levels to understand there. And then again, $20 right here is a significant level going all the way back to 2013 and 2012, where it used that level of support the majority of the time. Okay, now let's look at some of the specifics. Healthcare sector, important sector. They're doing extremely well during COVID, obviously. The float size for shorts is huge. They are in this thing. They are piling up and they're trying to break it down. And what that can do is if it breaks out, all of those shorts have to cover their positions, which essentially means they have to buy the stock. They sold the stock initially, and now they have to buy it in order to exit their position because they were wrong. And what does buying the stock do? It improves the demand. It runs the price higher. So if this number is higher, it's in red, then that means that there's some shorts in there. And if this breaks through a pivotal $20 level, they can get crushed. Okay. So that's interesting. It's overbought on the RSI. That stands out to me. 4 million average volume. It did below that today. So that also stands out to me. Let's see, institutional ownership is about half, about 50%. Insiders are kind of involved, not too much, and it hasn't really done much in the return area. Earnings per share quarter over quarter, it looks good, but the sales look okay. I would have thought that would have been much better. And then let's see here, drop from record highs. Let's see if we see anything alarming. Catch its eye. Rite Aid earnings expected to decline. Is there earnings coming up on this? Q3 expected to decline. So they don't think this thing is going to do that great ahead of their Q3 earnings. When was the earnings? Is the earnings coming up? December 17th. When is that? What's today's date? That's in 2 days. Expected to decline. So that will either be, all right, so Rite Aid goes on watch immediately. Immediately. You know why? Because that catalyst is either going to break, that's perfect. That catalyst is either going to break this stock through that $20 area finally, like a surprise. You know, the analysts don't think it's going to do it. They're saying that it's expected to decline. They don't think it's going to jump. So that means that they have a bullish sentiment on it. They are part of this 24% that is holding the stock down. And guess what they'll have to do if Rite Aid proves them wrong and surprises them with earnings that are higher than what they expected? They have to cover and buy the stock back, which means what? It means a breakout. It means a breakout. And so we keep this on watch, not because we want to get in early, not because we think that it will beat the estimates or anything like that. We have no opinion on this. No opinion. No opinion, but we're watching because if they are surprised, if this stock actually runs and outperforms what they thought, we want to be ready. We want to be ready to take that trade and take that ride up. So this automatically goes on watch. Now, Rite Aid automatically goes on watch. And now, you know, I'll quickly throw it in here to see what these guys think. Bar chart hasn't been too great today on picking stocks, and they're not. Again, whew, that number's huge. Let's start with the what they think. 40% buy, weakened and short-term outlook. This goes back to what the analysts are saying. The analysts do not believe that this stock is going to beat earnings. They must have some sort of information. All right, trend spotter. Let's see this. Whoa, why does that say 4,000? 4,000 total profit, but on the buy side, negative. So they make most of their money selling this stock. Yeah, 9,000. That's interesting. So they have a good feel for the stock, to be quite honest, but they just have a better feel for it when they're selling it. So that's interesting. The stock analysis, I'm not a big fan of this analysis right here, even though it's a 9, you know, um, bloggers look like they're neutral on it. These guys are saying hold it. So if you're already in it, then you hold it. Hedge funds have increased their position, but there's not enough data on the insiders, and the fundamentals don't look that great. That's not, I don't know what to think about that. I would like a very clear answer on it, and that's not very clear. That's wishy-washy. Let's see, Wall Street, the Zen Master, below industry average overall, financials, performance, and valuation. So, I'm losing my care for it. I might still keep it on watch because earnings is coming, and that's the point. When you surprise someone, it's because they count you out. They don't believe you can do something. And then when you do it, it shocks the crap out of them. And so that's why this one's a good one to keep on watch. It has a particular story to it. The comeback kid. It would be very interesting. And I obviously would hope that it would win because then I'd make money. But, if it doesn't, then it doesn't. Right now, everyone's counting it out, and sometimes people are right. You're right. Like, I wouldn't pitch Shaq at the free throw line to win my game with 2 shots because history tells a story, right? And history for him shows that he's not a great free throw shooter. So, will history repeat itself? Most likely, yes. Can he surprise us and actually hit 2 free throws to win the game? Oh, of course, certainly. He's an NBA player. He's a professional. He's one of the best to ever do it. But, can he do it consistently? Can you pick the timing very well for when he's going to do it? Not really. Compared to Kobe Bryant, you can rely on him to hit 2 free throws pretty consistently to win the game. Like, he does that consistently. And so, that's the story here for Rite Aid is they have a big chance ahead of them, but their history hasn't been that great lately, and we're not sure what they'll do. So I'll keep them on the watch list for that very reason. I'll basically call them Shaq at the free throw line right now. That's what they are. All right, the moment I've been waiting for. VIVO. Don't personalize stocks, right? Because they can all surprise you. They can all surprise you. VIVO can do what I want it to do, or it can avoid me and not do what I want it to do or what I think it's going to do. No matter what, we're going to keep an open mind on this stock and be prepared for any direction that it moves in. But behind the scenes, I have good sentiment on this stock, and I'll show you why. We've got the clear breakout point right here, $20. Clear right here. You see it, tap, 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 right at that level now, right? Close right at that level. Tap back here, clear. Let's go to the weekly and see what we see. Clear right there. Tap, 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 tap all the way back here, $20. Broke above it and had a massive rip, right? Massive rip. And then on the monthly chart, it's a little more complicated, right? We see that $20 level is significant. We see it a number of times here, held it as support, tried to break above it here and stay above it, could not. Tried to hold it as support right there, tried to hold it, break above it here, could not. Tapped it here, tried to. So clearly this level is significant. But then anything before 2015 becomes a little bit challenging because we have more resistance and support areas here compared to, if this wasn't here, if it was trading lower, and now if it broke $20, it was at a all-time high or near all-time highs, just one level, then that would be easy to interpret. But for here, now we've got to go back here and see, we see that $20.73 is significant, which it tapped recently a couple days ago, because we see that right here, right here in this area, $20.70. We see it here, $20.70. We see it over here, So there's just more stuff to be aware of, more areas of resistance. We see it right here at 2167. So if it can break through 2170, 2060 or 2066, whatever that area is right here, then the next level would be somewhere around 2167. 2170 basically, that it could run to. So there's room for profit there, the breakout from 20 to 2167. And then if it breaks above that, now I'm dependent on it breaking like 3 levels, and that as it breaks through each level, it becomes less likely to continue. It loses momentum. Um, if it breaks above that though, then we look at this 2290 somewhere around there, because you can see that right here. You can see it, right here on the end of day right there. You can kind of see it in this area before it finally decided to break above it. So that's a significant level here. And then you can see it over here as well on the wicks of the candle. So this one I like it, but that is the challenge. It's previous history from many years ago. It's a challenge many years ago, 5 years ago. I just dated myself. Anyways, oh yeah, 2020. Now we're in 2021. Healthcare sector, they've been doing excellent. USA stock, of course. Float size is about medium, 42 million. I like it. Average volume 571,000. Not doing too bad there. 120 is the average true range. So that's room for movement. Insiders are in there. Institutions are involved. Looks like they've had some good numbers over the past for quite some time on their returns. And then earnings per share looks good. Sales quarter over quarter looks good. Sales for the past 5 years. Things are looking good for this stock. So I like the fundamentals. I've analyzed the news. I saw great things, such as look at the intrinsic value, 6 top stocks to bet on, outpacing its peers, and of course we don't put any significant weight on any one of these, but when you see a collection of them, that means that the market, other people who are analyzing this stock thinks the same thing. They're thinking a similar thing, that this stock should be higher. And if they think this thing should be higher, they will buy it. Okay, so let's look at this. VIVO. We will start with the price overview. Got an 88%. Something about that 88 number with bar chart. I'm not really liking that they keep doing that. So, let's wonder what's going on there. But their trading strategy, we depend on that. Trend spotter looks like they would have lost some money, $138. Not much, but it is a loss. But look at that. When they trade it, they do much better on the buy side. They would have been positive $375. That's good to know. And they would have lost, on the short side, $514 worth. So if this was a close friend of yours, and he's saying, hey, I love VIVO, it's a great stock, and you analyze this trade so you can help him, you say, hey, man, do you want to be more profitable? And he says, yeah, how can I be more profitable? You say, hey, yeah, that VIVO stock, stop shorting it. That's literally all you have to do. Buy it more, because you seem like you are much better at analyzing it and trading it when you are on the long side for this particular stock, and stop selling it. Stop shorting it. Don't short it anymore. And then he can increase his profit if that is true, that he has a good feel for the long side on this particular stock. So that's what's happening here on VIVO. So that's good, because obviously we're on the bullish side. So VIVO, we go in here, stock analysis, 10. Woo, that's good. Let's see why. There we go. That's what I like. Bought some shares. Some insiders have been active. I love it. Hedge funds have been active. I love it. The fundamentals look good. I love it. The technicals on the setup looks good. I love it. Bullish from the analysts. Love it. All right. So that's what we're looking for. Green, 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 green. So we're getting good sentiments here on this particular stock. Okay. Then when we go over to Wall Street Zen, my guy, Wall Street Zen, above the industry average. Let's expand this score. Valuation looks good. Financials look okay. Forecast, we don't really put too much weight on that, because that's what they think the stock's going to do in the future. And of course, that's futuristic. Who can predict the future? We don't know. But it's obviously based on how they're performing now and what they anticipate to happen based on their performance now. So that's good. But their performance now has been good. And their dividends, looks like they don't give a dividend. So they don't provide a dividend. So this looks good. I like this. The valuation, the total score is higher than the industry average, but not significantly high, right? Like, it's not super impressive. Let's check one more. Let's check Chartmail just to see what they think. Technical analysis, they're giving this a, Wi-Fi pickup, a 6. Interesting. But the setup, 7. All right, this is more important to me. I don't care if the technical rating is a 6, because it means it hasn't broken out yet and it's in a challenging area. That's what that's saying. It's in a channel, or it's doing something in an area where it's not just running, it's running into some sort of resistance. But the setup means that this is a great opportunity for it to break out. So that's excellent. I like that. I like that. Fundamental. This means a great, good spot to buy. Let's see the fundamentals on this one, see what they think as well. They gave it a 5. Profitability is profitable right now, but the valuation for the future is not that high. And the growth, they think it can grow, but it's 50-50. So, that's decent. A stock can break out with that analysis, with that fundamental. Can definitely have a nice, $1 breakout from this. So I like it. So that one would be my top one, right? I'll put that number 1. Let's see MITK again, MITK monthly. It's above all highs, but what was the challenge on this one? I think it was the pullback, trying to find it on the pullback. We didn't know where to trade it. So this one is number 3 on the list for me because I don't know where to get in. The setup doesn't look great. So, this one we'd watch for the pullback. And actually, I'm not that great at trading pullbacks, to be quite honest. I'm much better on breakouts. I know that about myself, so I'll just get rid of it. But if you guys are interested in trading that stock, you've got the information on it now. I'm just not a great support bounce trader. I don't do too well with those, so I'm not going to set myself up for failure. Similar to what I just told you guys on bar chart, where you're basically saying to your friend, hey, you're not great at shorting stocks, stop shorting stocks, and then you can make more money. You can be more profitable in the future. You got to do the same thing for yourself and analyze what are you good at, what are you not good at. And I know I'm not great at support bounces. I'm not great at stocks falling and figuring out the best spot for me to catch that. That's not my strength. So I'll just cut that one out. So now we have VIVO, we have Rite Aid, and we know the trades on Rite Aid. Rite Aid is basically that $20 mark, and that's only if the news surprises us for their earnings. So we've got one more day for that. That comes out on the 17th. Tomorrow's the 16th. So we've got to wait until tomorrow, Wednesday. Yep, tomorrow's Wednesday. So we wait till Thursday. Thursday, we will be up early watching this to see what happens. If this thing runs, then we'll set an automatic order on it. If it has, whoa. All right, hiccups. Not the right time. Sorry about that, guys. Anyways, maybe I should get some water. We will be watching this on the 17th in the morning. Okay, I'll set my alarm. You set your alarm. I can send you a text if you need. We will be watching this one. But we're not going to look for a trade right now or even think about this tomorrow. It might have some movement tomorrow. Traders tend to try and jump in early if they think a stock's actually going to perform well, and they try and jump in early to anticipate it and then be involved when it does give good news, or they sell hard when it has bad news. So, it might take a run tomorrow, but still stay the course and just be patient. It will provide a setup somewhere in there if the news is good. All right, VIVO, we know the trade. Let's go back to that daily chart. This is all I need to see. I'm going to dive into the intraday because I want to make sure, I want confirmation. But this right here tells you all you need to know. We got the $20 breakout level. We see the level right here of 22.10, where recently that was support for the stock. So that may become resistance for it in the future. On the weekly, we see a similar thing, that $20 area. And then, that 22.10 right there. So that's 2 levels of 22, yeah, somewhere around there. So that's 2 levels of confirmation right there. So that could be the target. The entry is obviously the break of 20, maybe a little bit higher, 2018, 2020, something like that. Don't do 2020. Never mind. Don't do 2020. 2020 has been a weird year. Don't choose it for your entry on a stock. That'll be an automatic fail. Do 2021. Okay, do 2021. And then we know where the stop is. The stop can be somewhere around 1972, the high of the candle the day before, because the high of today's candle is just too close. You can do the support of today's candle, like 1986. You can use that for your stop. But still, a stock that, swings $1.20 intraday, if you don't give yourself enough room, you can get chopped out of that trade. And that's what could have happened today to us in RVP, but we traded RVP very well. Our stop was at a good distance, and the stock actually came down 8 cents away from our stop. It was 8 cents, 8 more cents, and that would have stopped us out. We wouldn't have been profitable, and it would have taken off and run without us. It would have stopped us out and then said, peace. It would have left us. So, your stop has to be a good amount, a considerable amount. That way you don't get stopped out of your trade. You're still in it in case it makes any sort of swings where it needs to collect some shorts, collect some buys, do what it needs to do before it decides, okay, it's time to break out. Okay, so that's what we're watching. If you want more detail, I'm going to set this up for an automatic trade on my Thinkorswim platform. I'm going to text my bro and let him know that this is what we're watching tomorrow. He's going to be like, yes, let's do it. We've both been watching this stock for a while, and I'm going to keep this on gear for tomorrow. But if you guys want more details on how we trade this, when do we make adjustments in the trade, because sometimes, depending on how the trade's acting, we might change our plan in the middle of the trade. And that's actually been a great strategy for me. It's just having that natural feel and watching what's happening in real time and saying, okay, this might be, a level where we should take our profit. The stock, for some reason, is just not doing what I expect it to do today. It may be waiting for something. Maybe I'm not sure what's happening. So, we'll make some adjustments here. And so it's good for you to be aware of that. Okay. And that's what we do together. So $20 is the mark. It's got a nice strong candle where it looks like it's ready to break out. It's in the healthcare sector, which has been a strong sector. And then one more thing that's important to notice is that the market overall, the Dow and the S&P both ended, the NASDAQ ended with that green power candle, and the S&P ended with that green power candle as well, which shows a sign that they would like to continue these great movements that it had today. And what would a continuation of those moves mean? It would mean that these numbers down here, most of the stocks in the market are advancing. Most of the stocks are reaching new highs. Most of the stocks have just gotten below their moving averages. And if that is the case for the overall market tomorrow, then that's a great story for the sectors involved in these indexes, such as the technology sector and the healthcare sector, which is directly connected to VIVO as healthcare, which means that this one can also be one of the stocks that are advancing, above the moving averages, above this, above that, all of those great things for it as well. Okay, so we'll be watching this one tomorrow. If you guys have any questions, shoot me an email. I don't think you might have my email. I'll put it in the section right here for the bio or whatever that thing is, whatever that area is called underneath the video. Or just send me a message if you can on YouTube, on the YouTube Messenger if they have that. I'm not sure if they do. Or just shoot us a comment right underneath the video. That might actually be the easiest way. All right, guys, be careful. Protect your account from the downside, and make some profits this week. Let's do a good job of making some profit because we never know what's going to happen in the near future. All right, guys, if you have any questions, reach out. Happy trading. Stay safe out there.